What's good, my people? What's good? Happy Saturday. We tapping in once again. It's a beautiful day. Hopefully everyone's well. Hopefully everyone is you're prepared for Father's Day. Make sure you give your fathers their flowers and something way better than a tie. Don't nobody want no damn tie. Shout out to the fathers on this weekend. Get the crabs, get the crab legs if you are not allergic, and grab a couple of beers or water or whatever you like to drink. Kick back and enjoy. So this live, we're going to talk about a topic that came up because I had a consultation today. Shout out to one of my subscribers who decided to book a consultation with me. And we did a pre-qualification consultation. With the pre-qualification consultation, we basically go through and we look at the personal credit, we look at the business credit, and see essentially what you might qualify for, right? This person admittedly had a weak credit profile. They only had about a 560, 570. So with that being said, traditional financing was not an option for this person. But I'll talk to him. Not the end of the world, right? Not the end of the world at all. And the reason I say that is because you can always fix your credit. When it comes to getting approved, it's all about looking good on paper. That's the main thing that you want to be focused on, is looking good on paper. So what does that mean? That means there's certain things that you want to have in place if you have weak credit and you still want to go after some business funding. And later in the video, I'll go over some ways that you can build up your business funding, business credit, even with weak personal credit, because you can actually build your personal credit and your business credit simultaneously. In the conversation, I asked her one important question. I was like, so, she told me that she brings somewhere between $5,000 to $12,000 a month, which is great, especially as a business owner, right? She owns an insurance agency and she has 5 people underneath her. So collectively, she's running ads, well, not ads, but she's paying for leads, right? And she has a team already. She has somebody who can also basically generate the leads and bring them in. And then at that point, she's just able to sell, close them, get the commissions, right? And she was like, it's a situation where I asked her an important question. I said, I understand that your credit is weak right now. You're going to be rebuilding it. You absolutely need to rebuild it so you can maximize the amount of funding that you're looking for. Not a problem. Next is, so tell me about the business. She told me, right, okay, you do 10 to 12 a month. Fantastic. You got a team. Amazing. So what are your profits looking like? And there we came to a head. This simple question can make or break your funding opportunities. Because especially if you're in a position where you're going for funding from alternative or traditional financing, everyone wants to know what your cash flow is like. Everyone wants to know what your profitability is. 100%. They want to know, okay, does this person or this business have the capability of paying me back? The only way they're going to know that is by looking at your tax statements, by looking at a profit and loss sheet, by looking at your bank statements. So when you ask and you wonder to yourself, and this is something even I had to learn, speaking to, different CPAs, when I would bring them my taxes and stuff like that, they were like, are you sure this is all the profit you got? Because it's not It's not enough. Like you have all this revenue, and this not we don't. Where's the profit at? And I'm like, oh shit, I need to show profit because I just thought I write everything off and save on taxes. And he's like, oh, appreciate it. What's going on, G man? How y'all living? And he's like, nah, like it's cool that you did your write-offs because you're saving on taxes, yeah, but you need to show some profit, because if you try to go get some funding, ain't nobody, like even the government is going to be like, you did all this revenue, but you don't have any profits to show anything. I'm definitely not a millionaire. I was like, oh, okay, well, cool. Let me start showing some profit. And so with this young lady, I asked her, so what are your profits looking like? She couldn't tell me. I said, okay, all right, you may not know your profits. All right, cool. So what's the lifetime value of your clients? She couldn't tell me. Okay. All right. So what are your daily living expenses? She still couldn't tell me. So part of your funding, and when you're going for funding, is you want to know your numbers, especially if you don't have strong credit. Now, if you have strong personal credit, you have a 700, you have a 720, you have a 750, you can get business funding with no financials whatsoever, because your credit score is telling the bank that you're good for it, that, hey, I got good credit. That means I know how to manage debt. This means that you can give me the money. But if you are going to a lender and you have under a 600 credit score, they need a lot more to feel comfortable giving you that money. They need some proof, some signs, some evidence that not only are you able to generate income, but you're also able to service the debt service the debt. That's what we call it, right? Servicing the debt. Pay the people. That's what they're looking at. So when we are in a position where we have weak credit, less than stellar credit, we need to make sure that we know what our numbers are looking like. This also allows us to make sure that we're profitable. This also allows us to just freaking stay in business. Like, I've definitely messed up hella months, hella years, because I was not tracking profit at all. Was not doing it. Had no idea about it. In fact, to just reinforce it, I actually got the book recently called Profit First, and it's all about the accounting. I help small business owners get funding. Sorry, if you're new to the channel, my name is Jamal, the Credit Protector. I help small business owners get access to capital. So all of this is, I'm sharing all of this for the goal of helping small business owners, entrepreneurs, real estate investors get access to capital, so that the other side of it is not just the glitz and glamour and somebody jumping out of Lambo and all that. It's the boring. There's a lot of boring stuff that goes into it. A lot of boring stuff that goes into getting access to the money. And I like to do all this because you want to know all of this before you go apply. This way you can get it all set up, giving you the game plan, right? And so during the consultation, she said, you know what, Jamal, it's not that easy to figure these numbers out. And I was like, yeah, it kind of is. You have software that will do the math for you, right? We got QuickBooks. We got different accounting software that you can connect your payment processor to that will do the math for you. Even QuickBooks will give you projections, right? They have YouTube videos on how to do that, right? Now, if you're not techie, then of course the old school way is reach out to an accountant. So I gave her an accountant that I use, a CPA, that can help her with that. Also, when you're looking for an accountant, get one that is, it's going to sound weird, but that actually specializes and has a background in doing business accounting. Not every accountant does or specializes in that exact area, or they may not specialize in small business accounting. They may only do corporate, right? Or they're only dealing with multi-million dollars or hundreds of millions of dollars. Because at the end of the day, when you are going for funding and you have a weak credit profile, everything now leans onto the business. And the business is going to be held under heavy scrutiny. So a lot of times what will happen, even if we're looking at state programs like the SBA or a state program like the EIDL or a state program like the if you go, let's say you go to a like the SSBCI, uh, yeah, the State Small Business Credit Initiative, right? You go to these certain lenders, they're going to want typically even more documents than a traditional bank because these are typically going to be loans or business lines of credit, which typically require more documentation. In that documentation, it will be like your tax returns. They're going to want to see that. They may want to see profit and loss sheets. They will want to look at your bank statements. They also may want to see your personal tax returns. They may even want to see your personal bank statements because they want to make sure that when they lend the money out, they're going to get a return. They're going to get paid back. The way they do that is by analyzing every part of the business and your finances as an individual. This is also why those type of programs may lend to business owners with less than perfect credit. Some of these programs go down to as low as a 550. A lot of them are around like the 660 range. On the other side, you have other businesses that do alternative lending. They may do lending based on your collateral, meaning if you have real estate or if you have large equipment or if you have accounts receivable on the books, right? They may lend to you based on that, future projections even. Or they may just lend to you based on the revenue that's going through your business. The important part here, though, is that they're still looking at the numbers. As much as we love our business and what we do and how passionate we are about it, whether we walk dogs, clean dogs, help small business owners get access to funding, those that are lending the money, and I want us to start thinking like a lender, those that are lending the money, there it's a business transaction for them. They only care about the numbers. So for us, we also have to start caring about the numbers, or at least work with somebody that can care about the numbers for us, or get software that will care about the numbers for us so that we can have that conversation with a lender. If you're working with the lender, or let's say you have a banking relationship already established, showing them deposits is a great thing because when you're going in there, and let's say you have a 650, which is not ideal, but let's say you have a 650, you can even offer more of a case if you can show those strong financials. You can show them, okay, you see that I'm depositing 20,000, 25,000 in this account every single month. You can see that even at the end of the month, I still have maybe $5,000, $6,000, $10,000 left over after all my expenses. So you can see that I'm profitable. You see the cash flow that's happening. And then I can also show tax returns so you can see that I'm working the money properly, right? These type of things will help you when you have a weaker credit score. Hopefully that makes sense. If it's not one thing, it's going to be another, right? If you don't have stellar credit, then you want to start building better financials on your business, right? And it does seem overwhelming at the time because especially if I was having this conversation during the consultation, you know, you get into a situation where, especially if this business is your only source of income, you get into survival mode, right? When you're in survival mode, you're not really thinking about profitability or, making sure that the P&L looks good. Like I, what the hell a P&L was. I don't know. What? I got stuff to pay for. Like I need to sell something so I can pay something. Understandable, of course, because without money, you can't eat, you can't provide for your children, you can't fix your car, can't keep a roof over your head. So it's important, which is why it's also important to have someone that can keep track of these type of things for you. That way, it frees up space in your mind to focus on not just making ends meet, but opening up more opportunities within your eyesight, right? Or your mind's eye, so that you can see these opportunities that are opening up before you. Hope that makes sense. I'm saying all this to say, even for myself, as a reminder, we have to make sure we keep up with our numbers, especially if we're trying to get access to funding while you're in the process of rebuilding your personal credit, or if you have a late payment, multiple late payments, or if you have a charge off, or if you have some collections that randomly popped up. You want to keep track of those numbers so that you can start getting access to capital even while you're rebuilding credit. I've helped, and I'm currently helping clients improve their credit and make sure that they are working on constantly improving their cash flow so that we can get them funding. With a lot of lenders, you can get a decent amount of funding, right? You can get $25,000, $50,000, right? With the 660 credit score and showing revenues of $6,000 a month. Of course, the more revenue you show, the more you can get, right? Another lender, right? As far as alternative lender, MCAs. A lot of people don't like MCAs because they have crazy repayment terms and the interest rates are high. But if you have a business that's 1 year old, you have 3 months of bank statements, and your business generates $10,000 a month, you can get money from an MCA as quickly as 24 hours. The MCAs are going to look at the same exact thing. They're looking at the cash flow. So yes, it seems like it's an easier threshold, right? Okay, all I need to do is make $10,000 a month and my business needs to be around for 1 year. Okay, cool, I got that. Once they look at the business though, and they see huge swings in the cash flow, it creates an issue. The easy part about the numbers is that you can always make yourself look better on paper. Always, right? You can always tweak things in your business. You can always maybe increase the prices of your products so you can improve your profitability. You can always reduce your expenses. Maybe there's a lag with customer fulfillment, so you have a high attrition rate, so you need to work on keeping your customers for a longer period of time, right? There's always some kind of tweak that you can implement to make your business look better. And sometimes just you're not keeping track of the books. You just need to do that. Going back to the original conversation, knowing what your profits are and your profit margins, and understanding where those numbers are coming from and how you can improve them. All of this plays a part into going after funding, especially when you have weaker credit. Now, as an established business owner, even with good credit, it's still important to keep track of your numbers, especially once you're past the $100,000 in funding mark, right? You already gotten your initial 100,000. You've gotten your 250,000. Now you're going after 300,000. You're going after $500,000, $1 million worth of funding. This is where it's just as important, and if not more important, to make sure that your numbers are making sense and that your numbers are telling the story that you can afford this loan and that you can service this loan, even with good credit. You can have good credit, and you can apply for a certain dollar amount. And if your business isn't showing that it can support that dollar amount, you will get denied. Or they'll do a counter offer and then give you a lower amount than what you wanted. Right? So let's say you go for 500,000, but your business isn't showing that you can do or afford to pay back 500,000. Then they may come back with like 350, right? 375, 250, something like that, because something in the financials isn't telling that story. Okay. Flip side, with weak credit, weak personal credit, I've seen business owners who do have that consistent cash flow be ineligible for lending because their personal credit isn't up, right? So there's always the wonderful thing about going after funding and understanding it is that it's not a one size fit all, because everyone's business is different. If you do e-com, you have totally different operating expenses than someone that owns a restaurant. I mean, hell, if you do online anything, you have totally different expenses than if you are a brick and mortar, right? You have web hosting. You got to pay. You may have to pay for a web developer. You got to pay for all these different softwares, right? All these type of subscriptions that are involved in it. Brick and mortar, you got rent. Like, let's start with that. You got to pay your normal rent for your house that you live in, or your apartment, or your mortgage. Plus, you got to pay rent for the building that you're doing business out of, right? So instantly, it's double. All of these things play a part, and you want to be able to factor all of this in and make it make sense on paper. Because all of this stuff, y'all, it's an algorithm. It's all algorithms, it's all numbers. What's your FICO? It's a score. What is it? It's a number. When they talk about, oh, your P&L, what's that? It's a sheet that shows numbers. Your tax returns, it's numbers. It's all numbers. So if you're not a numbers person, get a numbers person. Like, I don't know what else to tell you. Get a numbers person. Like, you book a consultation with me, we're going to have the conversation. I'm going to ask, hey, what's your FICO score? Cool. How long have you been in business? Awesome. What's your cash flow looking like? What's the revenue? Great. Fantastic. Okay, you have great credit. Cool. You got a brand new business with no you got a brand new business with what's going is it Davian? I'll get right to you, Davian. So for example, I helped a real estate investor who has a sole proprietorship, right? She's a landlord. She owns a building with 8 doors. And she's been operating as a sole proprietorship, as a landlord and a property manager since like 2008. We were still able to secure her business credit. We got her $31,080 as a sole prop. What a sole prop means is that she didn't even form an LLC yet. She's been doing all of this under a social security number. When you have a solid personal credit score, you can hop out there and just be like, boom, I'm a sole prop. Here's the EIN number. Here's the name for my business, right? Here's my social. Let me get some business credit. And they're going to say, oh, you got a 775? Bet. Cool. We got you. No problem. Especially if you start at a bank that you already have a relationship with. You already been making your deposits with them. You already been banking with them for five years. There's nothing for them to give you $15,000, right? It's a no-brainer for them. You've proven and shown that you're capable of handling that. You do $15,000 now. Okay, cool. That was one bank. You just do that 4 more times. Where we at? 15, 30, 45, 60,000. That's 60,000 in business funding. You got $15,000 from 4 banks without having an LLC, because that FICO number said that you're good for it. It's all numbers, y'all. You want to be in position because it's all numbers. And all you got to do is make the numbers look good, make the numbers look good in your favor. Now, if you're here and you're like, I don't even know how to do that, like my score's jacked up, I don't have any revenue, like I'm in one of those weird twilight situations where it's not really hitting for me, right? There's still, and you may just need clarity on what to do next, what to focus on first, right? You can click the link that I have pinned. We can set up a consultation. We can start building out at least that initial strategy, because that's what I did with this young lady, my earlier consultation. I'm going to get to you, Davian. I told her what she needed to start with. She wasn't in position for funding. She had a weak credit score. Her financials weren't looking good. So I said, hey, you have the revenue. You told me that you make 10 to 12,000 a month. Great. But when we go for an application, I'm not going to sit here like some people and just charge you to fill out an application and then you get denied. I'm not going to do that. I don't do that. I only get paid when my clients get paid. If your application isn't approved, I don't get any money. So it doesn't serve me to just apply or put you in front of a banker and you're not ready. So I gave her what she needed to do for her particular instance. She needed to work with an accountant, get her financials in order, right? And work with my credit repair affiliate. So now she's working on both things simultaneously, right? She's working on her personal credit and she's working on getting the financials to look good on paper because she got the revenue. She makes 6 figures, right? So if you're making 6 figures and you're feeling like you're living check to check, that's just a money management problem. That's a cash flow. That's a money management problem at that point, right? Because most people can do pretty well making $12,000 a month, unless you have a lot of kids and you live in New York or LA or San Diego. So, got to put those caveats out there, right? And so that was her game plan for her. Your game plan may be different. You may already have great credit. You may already have great credit and a cash flow in business. You're just not exactly sure of how to go about your next round of funding to maximize it. That's a totally other conversation, right? That's a totally different conversation. Like, okay, you're in position. Everything is in alignment. Now you just need to know where to point and shoot at. Cool. Let's sit down. Let's talk about it. Let me understand more of your business, more of your personal credit situation so that we can build something out specific to you, right? Or maybe you have weak credit, you have good cash flow, and you have absolutely no idea where to go for funding. You're not too sure. I work with alternative lenders. Alternative lenders, they specialize in getting business funding to those who have less than perfect credit. A lot of their minimum requirements are, for everyone before you ask, your business is 1 years old. Your business is doing $10,000 or more a month. And you can generate 3 months of bank statements. Bank statements is also very important. Something else that was unique about this consultation is that the young lady, her deposits go into Cash App. And she was like, can I get funding using Cash App? No, you cannot use funding. You cannot go after funding using Cash App. They want to see bank accounts. They want to see bank statements. As of right now, Cash App is not a bank. It is not chartered as a bank, is not insured as a bank. It is not a bank. It doesn't count. Okay. So you want to, when you're going for funding, you also want to make sure you have a business bank account that those business funds are being deposited into. Even if you're getting paid to your Cash App, you still want those funds to be deposited from Cash App into your business bank account so you can show those deposits. Okay. Cash App in of itself is not going to cut it. Nobody accepts that. You can't buy a house showing people your Cash App. So you definitely won't be able to get business funding showing Cash App deposits. Okay. All right. Now let me get back to Davian. What should my credit score be before I start to seek funding of any sort? I would say a 660 at the very minimum. So remember, it all depends on your business, your exact situation. So if you have a business that is 2 years old and you can show that you have tax returns, you can show you have multiple months of positive bank statements, you can show business tax returns, personal tax returns, you can show positive cash flow in your business, you can rock with a 660 and go from there. If you don't have all that, like if you don't have all the financials, you're trying to put it all together, piece it together, you want to be at least a 700, because that way they won't stare so heavily at all the financials of the business. Because if you have a 700, even if you have a 720, a 750, they don't even ask you for financials, right? You can literally go out and get zero interest business credit cards with a 720, 750. They don't ask you for financials at most banks, right? So that's how that works. That's why I'm saying it all depends specifically on your business, how your business is operating. And it all depends on the type of funding that you're looking for. Some of these MCAs, they go all the way down to a 540 credit score. But you need to have a year in business and be generating $10,000 or more in that business. And with MCAs, the interest rates are fucking horrible. But if you need the money, you need the money. It is what it is. You got to deal with it, right? Let's see. Squat, is that how you say it? I'm not really sure how to say it. Yeah, credit is everything, bro. That's why people say literally if you have good credit, you don't even need money, because once you have credit, you can just get money. Like you can just apply for some credit cards and bam, you have $20,000. And then you can always use that $20,000 to actually invest in something. Like Jim Fitz said, he's an Amazon seller. That's a great business for credit cards. If you have a $20,000 business credit card at 0%, you can start using that. You can start off with $1,000, sell, buy whatever product you want to buy. I'm not an Amazon seller, but I know a lot of people in ecom buy whatever, right? PS5s, whatever, and resell it for a profit. Take that money, pay off the credit card, do it again. And you just scale up little by little. Start off with 1,000, start off with 2,000, work your way up till then you just running up the whole $20,000 credit card via Amazon. That's just one example, because it's Amazon, and retail arbitrage is one of the easier things to use, especially a credit card for. Unless you can't sell the merch, then that becomes a problem. All right, so let's see. My man said a week ago he began disputing things on his credit, froze all the secondaries. Cool. 1 week later, should I wait? Yeah, no, 1 week definitely not enough time. You definitely want to give them at least 2 weeks, at least, because with snail mail it takes a week just to get there. It's going to take a week just for them to get it, then another week just for them to read it. Well, they don't read it; they just put it through a scanner. Take another week for them to put it through the scanner, and then send a response back. That's good. You were added as an authorized user. That's what's up. With authorized users, they act more like the cherry on top. So definitely you still want to have 5 to 10 primary accounts. That means accounts that actually belong to you, that are under your name, and also have authorized users. Authorized users are great for adding high credit limits. and also for adding age to a credit report. But you want to do that after, you want to do that along with having 5 to 10 primary accounts. If you try to go for business funding and all you have is a bunch of authorized users on your credit, you're going to get denied. I know that because people hit me up all the time asking me about it. They send me screenshots and they hop on consultations like, man, I got all these AUs. I got a 750, and we look, and their age is like 3 years old, and there's 5 authorized users on their account. You want to let your personal credit age. You want to let your personal credit season before you run out and attempt to do any type of business funding. Even with business funding, with your, this is a great time to talk about this. What does your personal credit need to look like? Because it's not just a, that's dope, 2 Lambos. That's what's up. I like the Raptor too. That's they still make that? I thought they discontinued that. Anyway, one of my clients has a Raptor. Actually, he has a Ferrari and a Raptor and a Ducati. Anyway, so what does your personal credit need to look like, right? Before you go for business funding. This is important for everybody. If you're trying to build your personal credit before going for business funding, this is what you need to look out. This is how you want it to look. You want to have 10 positive accounts on your credit. 10 positive accounts on your credit. Preferably all 10 of them belong to you, and they are at least 6 months old. Really 12 months old at least. Okay? 12 months. Then for additional age, you can add on authorized users for that additional age. All right? If your grandma, your parents, a cousin, your rich uncle, your rich auntie has really good credit and they've had their credit cards for a long time, go ahead and add them on. Go ahead and ask them to add you as an authorized user. If you don't know anybody with good credit, then you can always pay for trade lines. So that's the foundation. You don't want to have any negatives. So no lates. You don't want to have any lates. You don't want to have any charge-offs. You don't want to have any bankruptcies. You definitely don't want to have a bankruptcy in the last 5 years. No collections, right? So no negatives whatsoever. The next thing is the age that is on your account, your age of your credit. That should be at least 5 years. It used to be like 2 to 3. You could get away with 2 to 3, but now you need to have at least 5 years of age on your credit. Hard inquiries. You only want to show about, you don't want to show more than 4. I'll take it down. You don't want to show more than 2. Right? What's going on? We're talking about getting access to business funding. Right now, we're talking about how your credit report needs to look so that you can actually get approved for some business funding. And so you only want to have about, no more than 2 hard inquiries at the time that you apply. Going back to your accounts, okay? You want to have at least 2 accounts with a $10,000 credit limit. This is because they have something called comparable credit. And the way this works is basically the banks kind of go back and forth and they kind of teeter off of one another. So if one bank sees that you have a $10,000 credit limit, they are more likely to also give you a $10,000 credit limit. If the bank see that you have a $20,000 or $30,000 credit limit, they are more likely to give you a $20,000 or $30,000 credit limit. Now, keep in mind, with high credit limits, there's a couple of things. It's not an exact science. There's a couple of things that go into how you know if you're going to get a high limit or not. You also, when you're applying, right, because it's all about where your credit report is at the time of application. Also, when you're applying, you want to make sure that your limits, not your limits, your credit card usage is low. So you want to make sure that you're under 30% when you submit the application. I know that for a fact because I did it wrong. I didn't know about the 30% rule. I submitted an application when I was at like 40. It was like 40%, 42%, something like that. It was with Chase, and I got denied, outright denied. I was heartbroken. I thought I was the shit. Because I was at that time I was still at like a 735. I'm like, hold on, I'm at a 735. What you denying me for? Y'all tripping. Give me my money. But I got denied. So what happened with that situation? I had to call the reconsideration line. I paid down some of my credit cards, so I was under 30%, and then they approved me. They approved me. Then I called again for a credit limit increase, and they tripled my credit limit. All right. Yearly fees associated with having a business. The BOI report. Yeah, so the BOI report, there's not much to it. I mean, you just fill out the form and submit it. You do it every year. If you don't do it, then they fine you. So yeah, that's it. You just fill it out, submit that joint, and that's it. Yearly fees. The annual fees depend on your business, the type of business you have, and where you're registered. In Maryland, we got to pay $300 every year on top of taxes. But there are a lot of states that don't have any annual fees just for having a business with them. Um, I do not remember the entire list off the top of my head. I always have to look it up. I'm not going to hold you. I do not commit that information to memory at all. There's a lot of other info to retain. I don't keep track of it. Also, with yearly fees, you also have to make sure if you're doing foreign filings, you also have to keep in mind that if you do a foreign filing to get access to funding, you will be paying taxes in both of those states. You will have to pay those filing fees in both of those states, right? So foreign filing is great when you want to get access to certain banks in certain jurisdictions that you know for a fact they are a killer bank that no one's talking about. A lot of sleeper under the radar banks. I don't do mentoring, but you can definitely click the link. We can set up a 30-minute call and actually talk about what it is you're looking to do. I do one-on-one coaching, but I don't necessarily do mentoring, right? Not at this moment. But I absolutely offer one-on-one coaching in this space. You can always just start with the 30-minute consultation. You can click the link that's pinned right there, right? And that's the best way to start. That's the best way to start. So yeah, the BOI report is just the government wants to know who owns the company. Now, there's been speculation about it that they are fighting against it, that it has been also ruled as unconstitutional because there are states that are like there are certain states that actually protect the corporate owner's privacy. Yeah, Davian, just go ahead, click that. Let's set up a 30-minute call, man, because a lot goes on in one-on-one mentoring. I would definitely need to know where you are in your journey, what you're actually trying to accomplish. Because one thing, I'm in a lot of mentorships, right? And the reason I don't do one-on-one mentoring is because, oh, well, not one-on-one mentoring, but the reason I don't have a mentorship group is I'm in a lot of mentorships and it's never a one size fit all. At some point, everyone in the group is still looking for that one-to-one interaction, right? So that's why one-on-one coaching in this space is better than just having a big group. So we could definitely set up that one-on-one with me. That initial consultation is 30 minutes. You can click the link, check that out, book a time on my calendar, and we can rock out, man. I would love to be able to help you for sure. Solomon Moss, what's going on, brother? How you doing? What about removing settled charge-offs? I was denied a biz line of credit despite settling I also imitation got a system approval. I don't understand the last sentence. Is that a do you mean a pre-approval when you say you got a imitation? Yeah. What about what do you mean? What about it? You're asking how to. Oh, you're asking how to. There's a lot of ways to with the. So it's a lot of things that go into that with the pre-approvals, right? Companies have been sued because they consider offering a pre-approval as false advertising. Like Credit Karma was sued for it because they would tell people that, oh, we we're showing that you're pre-approved for all these different credit cards, but then when you apply they deny you, right? And so they actually lost like a $3 billion lawsuit because of that. The other thing is that being denied the biz line of credit, you may want to see if you can. I'm just focused on getting the approval right now. May want to check into getting, what's the word I'm looking for? Reconsideration. Reach out to their reconsideration line, right? Reach out to the reconsideration line. Also, if you were approved and then denied, I will look into even the standpoint of false advertising and look up the case where Credit Karma was sued by the CFPB. They were sued by the CFPB, and it was a class action lawsuit against them for false advertising. After they lost that, after they lost that lawsuit, a lot of banks started coming out with these like guaranteed approvals. Even American Express, they switched over and they now have what's called their apply with confidence feature, meaning that if they show you a card in the pre-approval, it means you will get that card. Okay, so I would look into that as a way to overturn that pre-approval to denial situation. Look into that as far as false advertising. It'll take back and forth. Yeah, it's same thing. It doesn't matter who came in and denied it. It's same thing. It still goes back to potentially false advertisement, especially if you were initially approved, right? And then there's a whole bunch of other things that go into whether you're going to be approved or denied, especially with manual underwriting. And it depends on the bank, if how strict they are, how nervous they are, because banks are even more nervous right now because of all the defaults that have been happening, right? They are on their P's and Q's. They are taking away opportunities and taking away products left and right. And they're just overall tightening up their policies. But them saying you're approved and then turn around saying you're not approved is some BS. That's something that you could fight for. Not saying it'll be an easy fight, not saying it'll be a fast fight, but it is something you can pursue. Or like you said, you could just look at removing a charge off. Removing charge offs are also difficult. So removing charge offs, that can be a multi-month process. The thing is, with removing a charge off is not an exact science. It's not a situation where I can just say, oh, do ABC, quote this law, and it'll just fall off. It may or may not. What I can say is your first round, when you're disputing, anytime you're disputing, before you start the dispute process, and this is because before I got into helping small business owners get access to capital, I also helped people improve their credit repair specialist, and a personal credit coach, right? And the way things are, it's a natural progression because it's really hard to get any type of business funding when you have bad credit. So the easiest thing to do if you want to maximize how much funding you get is to fix your credit. I just no longer do it for people. I have a team and a company that I'm affiliated with that handle all of that for you. But let's say you wanted to do it yourself. Okay? Let's say you wanted to do it yourself. Let's rock out. Let's do it. I got a couple of minutes. You always want to start off with removing all inaccurate personal information. You don't even want to start off with going straight at the account. because 99% of the time, all they're going to do is say, hey, this account is verified, and that's it. They're just going to say it's verified, and then you're going to be mad. So instead of going straight after the account, what you want to do is you want to start removing all inaccurate personal information. That means telephone numbers, social security numbers that aren't yours, misspelling of your names, addresses that you no longer live at or have never lived at, spouses, because sometimes they'll put a spouse on your credit report. There's no reason to put your spouse on your credit report. You also want to remove your employers, right? You want to take all that off, all of it, first, before you start trying to attack this account. Once you do that, the next thing you're going to do is you're going to ask the credit reporting agencies, because that's what they are, credit reporting agencies. They are not a bureau. I got you, Damien. Hold on, Davian. They are not a bureau. They are not a government entity. You want to ask them to just double check the account to make sure that it's accurate. They're going to come back. They're going to tell you it's verified. I'm already letting you know. They're going to tell you it's verified. That's what's going to happen. Then you're going to ask them again, like, hey, you sure? Because there's still some stuff wrong about this account. You sure it's accurate? They're going to come back and verify it again for the second time. You're like, all right, okay. On the third round, you're going to find one thing that's wrong with the account. It only takes one thing. Maybe the dollar amount is incorrect. Maybe the late payment that's being reported, if there are late payments being reported, maybe that's incorrect. Maybe it's a charge off and it shows a balance. Charge offs are not supposed to show a balance because it's charged off. It should be zero. Maybe it shows a balance. You point that out, right? You send it. They may or may not fix it, okay? Once you find that, pinpoint the one thing that's inaccurate. Let's say in this case, it's showing that it's a balance, even though it's a charge off. You send it. At this point, they can either fix it, meaning they can zero out the balance, or they can delete the trade line. 100% of the time, if they can just fix it, then they're just going to fix the balance and make it zero. Then they're going to send it back to you. You're going to look for another inaccuracy. You see, this is multiple rounds we're talking about, right? This is not a one and done situation because charge-offs are hard to get off. It's just what it is. So then we're on the fourth time you found something inaccurate. At this point, what you want to do is file a CFPB report. Most people ain't telling you this. Most people won't tell you this, not on YouTube. But you're going to want to file a CFPB report with the fourth thing for the fourth round, the second thing you found inaccurate. In that letter, you're going to let them know it's your fourth time trying to get this account to be accurate, right? And then you're going to point out the consistent inaccuracies in their reporting. So the first time you asked them twice, they said it was verified, but those two times they still have those other inaccuracies on it. The third time you pointed out that it had a balance, even though it's a charge off. The fourth time, maybe it's reporting payment history after it's been charged off. They're not supposed to do that either, right? So now this is the fourth time that you found an accuracy on this account. Now you're going to start sending CFPB complaints. You're going to start sending FTC complaints. You're going to start sending complaints to the office of your state attorney general, outlining how these people, these companies are literally not doing their job because you gave them 4 times to fix it and they ain't fix it yet. So at this point, they are either intentionally doing it wrong or they just negligent as hell. And at that point, you may even want to get an attorney. Because if it's multiple inaccuracies on your credit report and you tried to fix it, you gave them 4 times to fix it, and because of their inaccurate reporting, you missed out on $250,000. Their inaccurate reporting cost you $250,000. So at that point, you may want to consult with an attorney, one that specializes in the FCRA, who can potentially help you sue them, get the deletion, and perhaps even be compensated because you missed out on $250,000. That's just one pathway to do it. That's just one pathway to do it. You can also, if you don't want to get an attorney, you're welcome. If you don't want to get an attorney, you can just keep disputing it with them. There's a lot of other ways. The way I just explained is just one of many. There are the 1099 dispute. There's the dispute that a charge off is now considered income based on tax law, or tax code. A charge off is considered income, and income is not supposed to be reported on your personal credit. That's another way to dispute it. It's a lot of ways to dispute this thing, right? So I know I've been rambling. I appreciate everybody for tapping in. Listen, Davian, anyone else, if you have a situation and you want you want to talk about it one-on-one, book a consultation with me. Use the link that's pinned right there in the comments. Okay, it's a 30-minute consultation. You can tell me about your issue, and we could talk about potential steps to move forward, whether it's going for credit repair, what you would need to do in order to get in position for business funding, what to do if you want to get into business funding, right? Or whatever other situation you may have. Okay, Davian, we can definitely tap in. Holler at me about the one-on-one mentoring. I heard a lot about them. I'm repairing my credit now, so I'm not applying for anything right now. Great. Navy Federal is great. A lot of people love Navy Federal. Navy Federal leans heavily on their internal banking. So as long as you continue to make those deposits, as long as you continue to open up different accounts, like open up a savings account, do a pledge loan, yeah, man, don't wait, don't hesitate, my brother. Don't wait, don't hesitate. No time like the present. You know what I mean? That way, even when we're talking, all of this information that we just spoke about today is still fresh. And it's not 2-3 weeks from now. It is not going to help as much, right? It makes a lot more sense to do it now while it's fresh, and we can literally just pick up where we left off. But Navy Federal is a great bank. They're cool. They give you high limits. Yeah, I don't have anything negative to say about Navy Federal. Okay. Now going back, so listen, it's been an hour, everybody. Definitely appreciate everybody tapping in. It was great talking to you guys. To in summation, I know we ended off on personal credit because that's always going to be the foundation. Even when we're talking about business credit, business funding, the personal credit is still the foundation. If you're not working on your personal credit, y'all, you got to work on it. You got to work on it. Now, you know what? I'm going to go a little bit longer, so I want to let you guys know something. You can build up and work on your personal credit and build up and work on your business credit at the exact same time. Okay? You can do both. You can send out your dispute letters. You can work with a credit repair company. Check out the link in the description of this video. I have a link to a credit repair company that I'm affiliated with. They do great work. It's a totally done for you program. You don't have to do anything. You don't have to send out any letters. You don't have to make any phone calls. They will email you every time there's an update. You literally just upload your information and just sit back and relax, right? So while you're working on your personal credit, you can actively build up your business credit, because business credit is completely independent of your personal credit. To build up your business credit, You're going to want to make sure that you're registered with the state, right? So you got your LLC, you got your EIN, or you got your S corp, your C corp, whatever. And you can start off with these things called vendor accounts, tier one vendor accounts. And vendor accounts, now some people want to argue with me about it, but vendor accounts is really sexy store credit. That's what it is. It's really sexy store credit. All right. So some vendor accounts that you can start off with include stuff like Granger, which is like an office, a cleaning supply company. You can start off with Uline. They have office supplies. You can go to eCredible. eCredible, what they would do is if you have utilities for your business, like you pay for internet or a cell phone bill or your phone number, right? Those type of utilities for your business, they will report that to your business credit, right? The other thing is you can have the creative CEO. The creative CEO, they offer a lot of different products and a lot of different services. Okay. And then you also have something like Five Star Processor. Five Star Processor is actually a payment processor for higher risk businesses. Like I said, previously, I used to have a credit repair company. So nobody likes to do business with credit repair because it's high risk, right? So that's how I know about Five Star. They also will report to your business credit as well. You only need about 5 of these tier one vendor accounts. Once you have 5 of those, you can start going for what we call store credit cards. Now, some of these, depending on the age of your company and the business, some of them do want your business to be 2 or 3 years old. That's like Home Depot. They want you to be like 2, 3 years old. Lowe's also wants you to be 2, 3 years old. But the great thing about this is, let's say you have a 2, 3-year-old business. You built out these tier one vendor accounts. After 5 or 6 tier one vendor accounts, you can start getting business store cards that don't require a PG. The most popular one, the easiest one to learn about, it's all over the internet. You can look it up, is the Sam's Club card. With the Sam's Club card, you can get like $20,000, no PG. That means they don't check your personal credit at all for the Sam's Club business credit card. Okay. And this is all while you're still building up your personal credit. Everyone shops at Sam's Club. So you can absolutely use that Sam's Club card to shop at Sam's Club or to conduct business, right? If you, let's say you have a vending machine business, you can definitely buy the vending machines from Sam's Club. You can buy the snacks from Sam's Club, right? And load up your vending machine. You can even resell the candy on Amazon. I met some folks with e-com stores, and the dude was like, he does like $18,000 a month selling candy on Amazon, which is crazy to me. That is wild. But hey, and he did it. He did it with his Sam's Club business credit card while also building up his personal credit. So now he's using business credit to create cash flow while also fixing his personal credit. You can 100% do that. Okay. Some other store credit cards that you can use. Yeah. Man, it's a lot of opportunities. There's a lot of different ways to do it. You have to know what's available to you. Some other cards, you got like Floor and Decor. Floor and Decor, they now do a soft pull. It's not completely no PG. They'll do a soft pull. Best Buy has store cards. I already said Lowe's, Home Depot, Staples, right? Office Depot, Office Max. Believe it or not, most stores offer business credit and business credit cards or business store credit, as long as you have those accounts built out. But start off with 5 of those 5 vendor accounts I mentioned. That'll get you to tier 1. Once your tier 1 is built out, go for the Sam's, go for the Staples, get you a couple of gas cards, Gas cards are cool because, of course, you'll be able to fill up the tank. If you have a transportation company, right, or a trucking company, box truck company, Sprinter vans, whatever you got going on, right? Um, I'm not going to say Uber and Lyft, but Uber and Lyft is a car. I'm not here to tell you what to do with the gas card once you get it. I'm just saying it's possible. It counts as funding, right? And you can get it no PG without them running your personal credit. So I know we talked about a lot doing this live, y'all. Appreciate everybody tapping in. Listen, if this was what you were looking for, definitely remember to like, definitely share this out with others so that they can watch the replay, and absolutely book a consultation with me so we can talk about your exact situation on what you need to do to move ahead. All right. It's a 30-minute consultation. We're going to go over your personal credit. I'm going to give you some strategies to improve your personal credit. We can talk about what it looks like when it comes to having a team of people work on it for you. And then we could talk about your business funding strategy. Are you in position? If you're not, what do you need to do to get in position? What banking relationships do you currently have? And we could talk about what it looks like to build out a funding strategy for you. Click the link that's pinned at the top. Click the link that's also in the description of this video. You don't want to wait. You don't want to hesitate. There's no reason to wait. Like, what is there to think about? We just spent the hour talking about this very topic. What we talking about? What we doing? You already know what's up. You know this is something that you need. I know it's something that you need. We both know it's something that you want. So what's the point of waiting on it? What's going to happen if you never take action? You're like, oh yeah, that was great, I'll do it later. And then you never do it. And then 7 months later, you back on another live in the same exact position. Right, David? Yeah, for sure. Right. And you never take action. Things happen. Life hits you. It's a Saturday, the Saturday before Father's Day, couple of beers, your friends pop up, the kids start wanting to take you out and stuff. You're going to forget. And then 7 months from now, the credit, exactly. 7 months from now, your credit's still going to be in the same place. You never got the business funding. You didn't even look into building up the business credit. And you're like, damn, I just let 7 months pass me by. And at 7 months, we in the new year because we're in June right now. So in 7 months, we're going to be looking at January 2025, and you're still in the same exact place that you were in 2024. It literally only takes 6 months to rebuild your personal credit and to build out business credit. You can literally put yourself in position to get access to infinite amount of funding within 6 months. By December, you can have built out business credit and have a good credit score. But only if you start now. Not if you start tomorrow. Not if you start next week. Only if you start now, you'll be able to take those action steps towards that goal so that you're in position within 6 months. And you'll be walking into 2025 with solid business credit, with your financials in order, because you listened to me earlier. You work with a CPA that got your financials. You got QuickBooks or any other type of bookkeeping software. And you're going to walk into 2025 being able to walk into a bank with your head held high, knowing that you're going to get approved because you did all the groundwork for the past 6 months. Now it's just time to eat. At this point, it's just time to rack up the bag and put that bag to work. Right? So go ahead, click the link, book that consultation. In the meantime, in between time, y'all have a great one. I'll talk to everyone later. Peace.